Nicholas Gibbs has decided that he will join us at least one more time. But that's only because I said he could plug this interview that he's got coming up.
Well, before that, Randy,
Yes.
I know you don't have anything over there, but cheers to you, me, and the rest of our crew, our handsome merry men, or whatever the phrase is, on finalizing the book,
Yeah,
the
it's
the book that will
100%.
be coming out.
100% ready to go. Just sent it off to Amazon just a little while ago. And so I thought it would be by tomorrow, but it's probably going to be the next day. The pre-orders can commence.
Yeah.
Yeah,
So at least this time, people can say that we are talking our book, and we're
that's
proud of it.
right. We are going to be talking
Uh,
about the book. All right, plug away now. You can plug away. Yeah.
yeah. So I've just completed today a very, very, I think, powerful interview
Hmm.
for anybody who's interested in the stock market, trading, options, or anything like that. I had the fortune to interview Tony the Bat Batista. If you don't know who Tony is, he is a legend in the options world. Pretty much him and his crew created or had some touch in anything going on with trading.
Wow.
They starting off with Tom Sosnoff and them. They were all market makers starting, back in the 80s. They all came up together. They're the ones that created the first online trading brokerage platforms, Thinkorswim. Eventually, they sold that, and then they created a new platform called Tasty Trade. Everything from 0-day options. If you ever heard of IVR, any like naked strangles, all these terms, that is them. They are the ones who did all that. So had very good conversation today, talking with Tony. He was kind enough to share his valuable time, and we just got into some real talk about maybe the misperception or the bad view that people have on options because they don't actually know,
Mhm.
and kind of taking a contrarian look at all these people who just say just put your money into the S&P 500 and leave it and forget it. So I think if you're interested at all in trading, in investing, in options, in stocks, anything to do with money, I think you'll get a kick out of this. And again, this is from a gentleman who has been doing this since the early 80s, risk taker, a contrarian, and a very successful one at that. So
So,
stay tuned. It'll be dropping soon. It is
okay.
off to be edited
Okay.
as of this evening. So hopefully we can drop this next week. I will be dropping it to the subscribers first on my X, who pay me handsomely a dollar a month.
$1 a month.
They will get it first, and then from there I'll share it to the public because it's important. I want to share with the Tesla world people like him
Yeah.
because I feel like there's a huge gap and void, especially people who I know are blindly trading options
Mhm.
within Tesla who don't actually know what they're doing, and they
Mhm.
need exposure to the kind of content that they do. So, anyways, that's my plug. Thank you for giving me a chance to
Well,
hype this up.
that's fantastic because you see that'll lead right into what I was going to talk to you about anyway.
Oh, perfect. Is it
You see,
anything to do with
because
this?
no, because you put out a post earlier today saying folks
Oh,
should not leverage into tomorrow. And you, of course, charge people real money to come to your day-long trading seminars. And so I'm going to try to get something for free right now for everybody that's listening. How do you play at all around these events, or do you stay away because there's no way to really know?
um, the answer is yes to both of those. So let me not sound like I'm talking at both sides of my mouth. For example, right now I've got 15 short calls on Tesla.
Okay.
And it's funny because Tony and I were just talking about this in an interview. How it's people, if I say that to you
Mhm.
and you think that means that I'm short Tesla,
Right.
you need to go do some homework, or you need to sign up for one of my courses whenever I decide to do them, or go to the Tasty Guys and learn.
Right.
I have 15 short call contracts with a
Mhm.
strike price of $500. That
Mm-hmm.
is inherently bullish. That
Mm-hmm.
is saying essentially that if Tesla gets to $500 a share, I will have to sell 1,500 shares. Those contracts expire on Friday.
Okay.
This Friday. Okay.
Right.
So that is technically an earnings play. Now, you asked, your question was, do I do any trades around it?
Right.
I will be out of those maybe 3 minutes, 2 minutes before the closing bell tomorrow.
I see.
Or maybe earlier, but at the latest, it'll be
Yeah.
that.
Yeah.
And the reason I have this trade on is because I know I placed these last Friday.
Uh-huh.
I knew that I would have Friday, I would have the whole weekend, I would have yesterday, today, and I'll have tomorrow to all time decay those contracts to
Yeah.
suck out all the extrinsic value so that there will only be 2 days left of extrinsic value
Right.
and there will be no intrinsic value.
Mm-hmm.
And so that's where I get paid, is those contracts losing value.
Sure.
And so in that sense, yes, I am doing a little play there. It won't be big money. It'll be a couple grand, like nothing crazy, but it's fun. It's like a little something that's safe, not too dangerous.
Right.
And the worst case scenario is we hit a 500 and oh no, we're at 500 guys.
Yeah.
Yeah. At the same time, I do have leaps. My post, what I was really trying to convey to people is, look, I have leaps on that I put on again when we were hitting 419, right? I got out of my leaps when we were at 445, 446, and then we ran up to 470. And yeah, I missed the top, but then we went back down to 419.
Right.
Great. I reloaded again.
Right.
My post, what I was trying to tell people is this is not the time to be putting on some YOLO call options. This is not the time to be leveraging yourself and buying shares on margin because you think you know what's going to happen. Again, something that you'll see a lot in the conversation between Tony and I is that you don't know what's going to happen. You have no idea. And I get it. Everyone's bullish. Everyone thinks, hey, record deliveries, it's going to be good earnings. Robotaxi 14, FSD 14's out. Tesla's comp package is right there on the 6. That will anchor the stock so it won't go too low. I get it. I see it too. I see all the rationale. But that is when the least likely thing is going to happen. So I would just caution people, don't go on margin. And my whole message is like, odds are if you're an all-in Tesla investor or if you're a heavy Tesla investor or just in general, if you're any investor, odds are your portfolio is near, if not at all-time highs.
Yeah.
This is not the time to be going into margin. This is not the time to choose to let's get leveraged or to take crazy shots. Be humble, check your ego at the door, protect what you have there, because these are the moments we're more likely to go down than up. It's just the way it is. Look at gold today. Gold took a hitting today.
Yeah.
And again, we talk about that with Tony. And you'll understand why it went and what signal he saw where he was able to short the futures on gold to make money overnight and what he saw. And again, it was just obvious to him. But these are the times where you want to be more risk off than risk on. And so I felt like there needs to be someone out there who's not extremely bullish, extremely excited. Look, I'm excited, guys. I am. There's a very good chance that by the end of the year, we're at 500, 550. Very good chance. There's also a very good chance we're at 380, 360. And I just think that there needs to be I don't know if I'm the adult, but there needs to be someone who's sober and saying, guys, let's not get greedy. Let's not go a margin. Let's not start making stupid decisions. And let's enjoy the day. Let's not have a great call, great excitement, and then we sell off and everyone's crying because they're getting margin called the next day.
Yeah. When I was day trading, I was always the most nervous around these kind of events and stuff because your point is so well taken. Is you can, the odds are blah blah blah, and all of this is all about the odds. But earnings calls are just, especially for Tesla, they're just dangerous. Elon makes one comment out of an entire earnings call and the stock goes down $20. I mean, it's just like, the rest of the call could be phenomenal. Everything could be going perfect. And he makes one comment or his mood isn't right. And the thing is a bust. So, but was interesting, I did go back and look at the last 5 years, and a week later, Tesla is on average up 2.5 points, 2.5%. So that is the average over the last 5 years. So if you're long, if you're in, you have a good chance of being up 2.5% this time next week. But you also have a chance of being. It was the worst case was down 14%, and the best case was up 25%. So it's a pretty wild story out there.
Yeah, I mean, in general, I'm pretty bullish going into the earnings call. I'm bullish going to the rest of the year. Um, like I said, I'll be out of those short calls tomorrow at some point. Even if it means I have to take well, I'm already profitable on them. It won't be a loss, but it could be. If we all of a sudden go to 490 tomorrow, like
Right.
yeah, I'll take a loss on them. But again,
It's not going to. No,
yeah. So, but people just need to be cautious. I feel like these are the times where we start seeing people make stupid mistakes, and I think the best thing everyone can do is not cash, but portfolio preservation. We don't know what's going to happen. We are clearly in a market where it can get spooked really, really easily. So you need to be prepared for a sell-off.
Right.
You need to be on guard more than ever.
So I said this morning in my show that any serious investor in Tesla, anybody that's looking at Tesla or thinking about being an investor in Tesla, if they've been watching the videos of 14.1.3, well, the whole series of 14 point, they would have to come to the conclusion. The evidence is there. It's done. I mean, autonomous vehicles driving anywhere probably in the world it's a done deal. These are driving in all kinds of situations, conditions, rain and snow, and every other kind of thing. And New York City, a city which I will not drive in. So am I crazy, or would that be, is that overstating, or is it really crazy to the extent that you're interested in Tesla and thinking that this is a big deal not to be investing heavily at this time?
Yeah, so there's like 3 questions in there. So let me start off with the FSD stuff. I agree with everything you said about what you see with FSD minus the snow part.
Okay.
I haven't seen anything in snow. So I think snow is a little different. I live in Florida. I don't think anyone gets rain like we get in Florida.
Right.
And FSD's handled that fine for a long, long time. I've heard a lot of naysayers out there talk about rain. Honestly, we have some, for people who don't understand, when it rains in Florida, it'll only rain for like 30, 40 minutes. It'll be the hardest, most violent rain you've ever seen.
Texas will give you competition. I've been in gully washers in Texas that were also similar to Florida, but I think the worst I've ever been in was Florida.
Yeah. Maybe I'm biased, but I don't think there is competition. But the point is, I feel so much safer with FSD on, and it works. It does just fine. It sees better than what I can. And it's to a point where I would still drive, even if I didn't have FSD, but you'd be like really slow, eyes peeled wide open, death gripping the steering wheel, hazard lights on, like trying to find that car slightly in front of you and trailing, behind it. But with FSD, it makes it a lot better. Anyways, so take the snow part out of it because I don't think we've seen anything with snow just yet. With this version.
I probably overstated. Yeah.
Okay, so to answer your first question, yes, you did overstate. As far as it's a done deal, I felt like it's been a done deal for a while, meaning it's been so clear to me for about a year now that they have solved this. It's just been about, these last few things that they have to tweak, but it's done. Like they've solved it. It's just so clear. Now, as far as, is it 100% done to the point where watch out stock, watch out Robotaxi expansion, all that? I don't know the answer to that. I will feel hopefully more confident after the earnings call, which I hate so many of the same questions. I really wish I could know who's asking these stupid questions that are not germane to what matters. And what matters is Robotaxi expansion, the progress, anything we can get from that. I don't get what everyone's fascination is with new vehicles. Like, that is not what is going to make this car a $8 trillion company. It is not, right? But like, I get why people could be interested. Don't get me wrong. I'm interested in those questions too, but it's not a top 5 question that I would ask Elon if I was in front of him. There's no freaking way. But I think either they're going to have to tell us something on the earnings call, or we're just going to have to see them walk the walk and see that FSD 14 has them adding more vehicles, expanding faster. Until we see that, I would be hesitant to say, this is it. So I think we just need to be a little humble, a little patient. We're clearly there. They've clearly solved it. We don't know what little finessing items that they want to address before they actually decide to flood Austin with vehicles, before they start to really expand. There's obviously something that's gating them, right? There's clearly something that's gating them. Was that they were waiting for 14 to be done? I don't know. We'll find out. Was it certain data points for certain cities that they want to validate beforehand? How long is that going to take? I don't know. I don't know what I don't know. But once we see them actually expand and at the same time adding more vehicles and opening up to the general public, then, Randy, I will say, yes, we are 100% done. You're never truly done, right? You're always going to iterate on anything that you do. But at that point is where I would say, okay, this is it. But until then, until we, Elon's talking about all these robotaxis in 2026.
Yep.
I would like to see at least 100 in Austin. Let's start there before we start talking about hundreds of thousands, So there's a gap there.
Yeah.
And the truth is, everyone in the Tesla community will see it before everyone else on Wall Street does. It's not like you're going to miss it, right? You'll know it. But when they all of a sudden have 50 cars in Austin, and then 100, and then 150, and then 200, Wall Street's still going to be asleep at the wheel, ironically. They'll still be asleep at the wheel. They won't know what happened. And you're going to have plenty of time to get even more aggressive if that's what you're looking to do with Tesla. But until then, in my opinion, take it easy, dip your toes, slowly follow it. As the stock's going up, you can slowly get more and more aggressive. And then once you feel confident, like this is it, it's happening, who cares if you miss the first 10%? Who cares if you miss the first 20%? If we are going to go to a multi-trillion-dollar company, who gives a F? Really, who cares? It's better that you're right on the timing as far as, all right, now it's real, than thinking it's real and you spend another 3 years sitting here flat at 400. That's just my opinion. One man's opinion.
I hear you. That's why we have you on here, is for your opinion. Do you think he'll give us any real metrics on Robotaxi? That is question number 1, which was, I think you would agree, a good question, is, hey, Elon, what's happening with the metrics?
I don't like that question because it's too ambiguous.
Okay.
Right? It gives him room. Elon is not a person you can ask questions that have ambiguity or that have room to be open-ended. You want to really look, if you're talking to a new girl or trying to prospect a new client, open-ended questions are great. For Elon, we're looking for answers. If you're looking for answers, don't have open-ended. So I think that's the problem. I don't think he will give anything concrete. He'll talk more about the future, and I just think he'll be wishy-washy about it. I mean, I would love to be wrong, but that's just what my gut says, is that's how it'll play out.
So he may fall back on the already known stats about safety compared to other, to non-ADA vehicles, blah, blah, blah. Or he may give us some idea of, again, what he's expecting, over the next 3 months or over the next 15 months. But not necessarily. We've had 3 incidences in Texas in the last 30 days, all of which
You
anyway,
definitely won't hear that.
not going to hear that. Yeah. Okay.
You
All right.
definitely look. He's got a vote to win, and I'm just now seeing this today. Apparently, there's a lot of people rallying against it, or well, I don't know if that's true. A lot of people. I saw that there's 2 articles at least of articles that are rallying against it. I like my logical brain says that I don't care how many people are rallying against it, how many articles are. They're clearly not invested in the company.
Right.
Like, if you're invested in the company, you're not going to sit there and
Say no.
vote against your own interests. Like no matter what you think about politics or anything, you're not going to vote against your own interests. You're just not. The only way that you would do that is if you own Tesla shares in some type of fund or pension, and the board who makes the decision on how to vote have their own political bias. But guess what? It's not their money, so they don't care.
Well, that's more or less what's going on. So you've got ISS and Glass Steagall. Anyway, you have these 2
Glass
companies,
house.
Glass House. You have these 2 companies that are in the business of telling these pension funds how to vote. And they definitely, they voted basically against Tesla
Every time.
and not when I say vote, they don't vote anything. All they do is recommend.
Yeah.
So we don't know whether, that this or that school system or whatever votes the way that they want them to, but that is what they do. And apparently they're still into ESG and all this other stuff. So that's what's going on.
Yeah, look, I made a pretty aggressive post the other day defending Farzad when people were kind of ripping on him for talking about putting a steering wheel and pedals into the Cybercab to maximize a production of the lines. And, I just think it's hilarious when people come out and try to rag on someone, even Tesla content creators, you know who you are, who never give an opinion, but are very quick to call people retarded or whatever on their takes after someone else like shows or says something to the contrarian of it. But they never have, like, I have little respect for anyone who isn't in the arena putting out their own thoughts, their own ideas. Even if they're wrong, at least you're putting yourself out there and you're thinking for yourself. A lot of people like to sit in the stands and critique, right? Why did he pass the ball there? Why did he do that? Just all this critique from people who aren't in the arena.
Right.
And so these companies that give their opinion are not in the arena. They are not out there additive. They're not adding value. They're not investing, having good returns for people. Like they are opinions that are in the stands, and they belong in the stands, and they deserve to be paid no mind. They're in the stands for a reason, because they either don't have the talent, the ability, or the fortitude to be in the arena.
Yeah.
And so my advice is only listen to people who are in the arena.
Yeah, I think the least what do you want to call it? The least surprising thing that's going to happen to any of us tomorrow in our personal lives are at the earnings call is I think the least surprising thing will be the vote. I think the vote is a fait accompli. I don't think there's any chance it goes the wrong way. Elon gets to vote his shares. His brother gets to vote his shares. That already you're talking about 20 something percent. And then I think we have 45% retail. So I think there's a very, 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 and then you actually throw in some Ron Barron and some Kathy Wood and, this is not
BlackRock.
This is not BlackRock. This is not going the wrong direction. Multiple technical analysts coming out the last couple of days and coming to Randy's number. I should say Brian Wang and Randy saying that we are looking at 900 next year. That is Dan Ives kind of also, as far as the well-known analyst, Dan Ives has kind of led that pack, saying he thinks we're a $3 trillion company next year. Crazy? 900 good? What do you think?
I think that just depends on what happens with Robotaxi and the expansion. I think that's what it hinges on. If we can get to a point where we start seeing real revenue, meaningful revenue to the company from Robotaxi, then yeah, I could see that. But short of that, I don't think we're seeing 900 next year.
Yeah, I think we have to have meaningful numbers out there to get to 900. But I also think my other caveat is in order to get to 900 or more, and I think we'll get to more, you have to see Optimus as a product. You have to you have to you have to be able to
I
look
don't.
at it and go, it's a product, it's ready to go, it's being manufactured. Yeah.
Yeah, I actually don't. I don't think you need Optimus at all. I think you just need Robotaxi out there, more people buying FSD, which second you buy FSD, you more than double the margin of the vehicle itself.
Right.
Having Robotaxis out there in mass, meaning in the only way you get into mass in a quick time, it's not cybercab, it's allowing people like us to put our vehicles into the fleet and then
Right.
they take a cut off that, which is really kind of like the golden goose
Mhm.
because Tesla doesn't deal with the maintenance. They don't have to, pay for the vehicle. They just take a cut. They get benefit from the charging. I mean, like it's really kind of the golden goose for Tesla is the existing fleet. Um, but if that can become meaningful, I think that's all you really need because from there, you it just the writing becomes so obvious in the wall. You'll probably see if that happens, you'll probably see Uber cratering, you'll see
Yeah.
Lyft cratering, you'll see Waymo if it was public cratering, um, and Tesla will just get the benefit for what's going to happen in the future at that point. And the stock market will look into the future
Sure.
because it'll be so apparent at that point. But between where we are right now and there, we got a long ways to go.
Okay. So,
Meaning right now we have like 10, 15 vehicles in Austin
right.
and that like, so it could all happen in three
Yeah.
months. I
Yeah.
don't mean long ways in time. Like,
Yeah.
time is not the limiting factor here. It's
Hmm.
their progress, but I
Hmm.
don't know what that is.
Hmm.
So
Yeah, we're not far off. My number is 750 without Optimus. I think to get to 900, we need some clear cut, some doesn't even have to be necessarily that it's on the order, there's an order page for it, but I mean, absolutely clear cut, it's ready to go as a product. I think then we go to 900 and maybe more. I was listening to Moonshots earlier today, and I think they were saying it was Microsoft who said they've been able to dramatically reduce the size of the componentry on a chip, the amount of space, all the details, I don't know what even you call all that stuff on the chip by using their own AI models to do it. So they're taking their AI model, looking at the chip, the AI model is saying, oh, if you take a little bit out here and a little bit out there, we can we can make more room on the chip for more stuff. I keep thinking that this is the thing that would be incredible for Tesla, that they'd be able to use this kind of recursive approach for design, for metallurgy, for FSD. It just seems like that would be that's the thing I've been kind of waiting for, and I've been talking about it for 3 months, and I haven't even been able to get people like Brian Wang or others to go, yeah, Randy, you're right on that. What do you think?
I don't know what that article is. I'd have to look at it.
Mhm.
Um, it's important to note, like none of these companies manufacture any of their chips. They might design them, but they don't manufacture it. So really, you need to work backwards from what the manufacturing capabilities are. So again, I haven't
Yeah.
read it. I don't know what all they're talking about. If they're just talking about transistors or if they're talking, I don't know what they're talking about.
Right.
But it might be something that's just demo, kind of like an MVP product. Like, is it possible? Sure, but for how many? 5 or 10? Sure. Is it possible at scale? Well, that's where things kind of change. Andre Kapathy had an interview recently, which he is, sometimes you hear someone say certain words and it's so validating, something that I've been saying for so long in my professional life and even on here, that demos, minimal viable products, MVPs, And any kind of prototype are pointless. They're a waste of time. With the people I work with, the clients I work with, I always tell them I don't want to work on POC, proof of concepts. I don't want to do that.
Mhm.
I want to work towards production, only production tasks. Because when you do POCs, MVPs, prototypes, they're all the same thing, just different words. When you work towards those, you're more likely to cut corners, use a little duct tape here. Well, we'll deal with that later, instead of thinking of scale at all times, thinking of production and working backwards from that. And so Andre Kapati talked about how he is not impressed anymore with demos or POCs or MVPs. I'm like, man, I've been saying this for years. It's so validating to hear someone like him say this, because you don't know how many weird looks I've gotten when I tell people I don't do POCs with clients. I don't. If you want to do a POC, you got the wrong guy.
Mhm.
I only want to work towards production of real stuff. I don't want to use synthetic data. I want to use your real data. I don't want to do any of this BS, because then you just get a toy that, okay, well, then how do we scale this? And all of a sudden we realize that what we did isn't scalable. Now we got to start from scratch again, or we got all these problems that we're trying to fix. And we have to start from scratch. But guess what? Most people don't like to start from scratch. Most people just want to sit there. Okay, well, how can we fix it here? Okay, well, how do we fix that? And next thing you know, you got a Frankenstein project. So, anyways, I guess all that just to say, I don't know what Microsoft did here or what it is. I do think there's a lot of validity to what you're saying as far as using AI to help iterate, but I still don't think we're at a point where any of these LLMs can really produce anything breakthrough. I don't think we've reached that point. XAI, I mean, that's their whole mission, is to
Sure.
get to a point where their AI can create new technologies
Mhm.
and discover new physics. We're not there yet. Everything we know still holds true. So, anyways, I'm sure
Digging.
whatever they figured out is interesting, but
Well, that leads to this then, digging into your bag of tricks, again, you specifically as an analyst, as a teacher, what are you using that that you're willing to divulge AI? What are you using some of these most recent models to do in your investing process? Is there anything that is working for you um, to make decisions or to plot ideas or just to get something done faster?
nothing really for investing per se. But for example, like a lot of people ask me, especially people who are subscribed to my X account. Uh, Again, $1 a month, people. You can feel free to subscribe, but I'll share on there a lot, like screenshots of my P&L for the day, the month. How things are going. I share everything, winning trades, losing trades. I don't think anyone's more transparent than I am. For example, you can see October, my first 3 months, I was up 10, 15 grand. And then I was down 12 grand and
Mm.
now up 26 grand. So like, I'm so transparent about everything. I explain why I do certain things. Again, like those losses I took intentionally to be able to get more premium, more
Oh,
money.
okay.
So anyways, I explained it all, but my point is people have asked me when I take those screenshots, like, what am I using to track my trades?
Mm.
Right. So I don't use AI to help me make decisions on my trades, but I have used AI to help me. So I have a code I already wrote. It's a React app that I created to be able to track all my trades, my P&L, and
Mm.
pull everything from my brokerage account, Tasty Trade, to be able to pull everything out so I can track my P&L on a monthly basis, on a per trade basis, and everything. But a lot of times, I want to make little changes to the code set,
Mhm.
and sometimes I just don't know how to do something. Other times I just don't want to do something, and so I will use Grok to help add little tweaks to
Mm.
my code base so
Right.
that I don't have to sit there and do that. So I use it a lot for that. I will also use it to understand sentiment. Like, what's the current sentiment going
Mm.
into an earnings? Just
Mm.
out of curiosity.
Mhm.
Or if I don't feel like looking it up, I'll use it as like how Google used to be used. Hey, what's the earnings coming up for this company? What's the expectation for the
Right.
earnings? Like, give me everything on it. So I use it that way. Sometimes I will put in a certain trade I'm in right now, and I'll just sit there and talk to Rock back and forth
Mhm.
about, what do they think? Am I stupid if I close out of this
Mhm.
now? So I'll do that, but that's probably more for fun than
Uh-huh.
anything.
Uh-huh.
But that's how I just use it as a tool. I don't use it for making decisions. I don't think you can use it to make decisions on anything trading or investing wise right now. Um, Honestly, I don't even think you will be able to in the foreseeable future.
Mhm.
I know a lot of people won't agree with me on that, but I think trading is there's too much of a what do you think is going to happen? What is your risk tolerance in a given moment? Like for me, for example, if I'm at the end of the month and I'm up 26 grand right now just for the month of October.
Mhm.
I'm not going to take as much risk because I don't want to ruin my monthly P&L.
Right.
Randy,
Right.
I'm more conservative.
Yeah. Yeah.
I will take possession. I'll take wins off at, 10, 15, 20%, where
Right.
normally my general rule is, anywhere from 30 to 50%. That's when I take profits.
Yeah.
But I will get more conservative towards the end of the month. Now, come November, new month, in my mind, P&L is at zero. So we're
Yeah.
starting from scratch,
Yeah.
back to basics. So that's not something you're really going to get with AI because it's so deterministic on what you think.
Mhm.
I was talking for a while that I was worried about the market getting too frothy when we
Mhm.
were going up to 450, 450, 60, 470 on Tesla. And I was like, and there was no like signal or big thing in the room. It's just you get a feel for what's happening, right? The market is a living, breathing organism, whether you believe it or not. It is, right? It's a conglomerate of all of our decision making as a species. It's a hive mind, right?
Right. Right.
And we don't know which way it's going to go. But I had a certain opinion that was contrarian to many people.
Right.
Turns out I was right. Did I hit the tippy top? No, I didn't. But I got out of all my leaps. I pocketed about 80 grand and I walked away.
Right. Right.
Then, like I said, 415 to 420, I reloaded up again. So those are things that I don't think AI will be able to do. And the reason you won't be able to use AI to do that, in my opinion, is because you can program anything to do anything. And
Mhm.
you can sit there and you can think, hey, I'll put in these rules and this is how I'm going to do things. And this is my opinion. But everyone else can do that same thing,
Sure.
right? So anything you can do, they can do. Anything one AI can do, another AI can do. So then where's the edge?
Mhm.
Because once everyone can do everything, once everyone knows all the information, well, then there is no edge.
Right.
So then how do you know what to do?
Mhm.
It just becomes kind of a philosophical mind bend, but I don't know. I don't know how else to explain it. My words aren't, I don't have the right words
Well,
to
okay. How about
express.
this? How about this? It'll be a pitch for my channel, and then you can
Oh,
tell me you can tell me where I'm wrong on this. So the whole basis of my channel, and one of the things that I do that nobody else does, you know about it. We do it all the time. We go through the numbers.
oh,
Okay, we look at gold, we look at silver, we look at oil, we go all
yeah,
through these.
gold.
Yeah, no, we'll talk about it in a minute. So we look at all these numbers, and if people are listening at least once a day when I do the numbers, then they're hearing and their brain is going, okay, that happened. Oh, I see. And over time, you're like starting to see patterns in gold. You're seeing patterns in oil. You're hearing from Randy and my guests, what happens to oil? Why does it always turn around in the high 50s? Why can't it go lower? And you're getting all this information. And so now you're getting this macro. You're getting this economic macro and you're getting this market macro that becomes a part of your investing strategy, which most people don't have an economic macro or a market macro as part of their strategy. Then, okay, now we layer on the Tesla fundamentals and we layer on the Tesla stock, the way the stock works, because Tesla stock works very differently than any other stock. And then finally, we layer on a little bit of technical analysis Brian and you say you're not technical analysts, but you're way better technical analysts than I am. So we bring you guys in to provide another layer. Now you've got all 5 of these things all working together to give you a pathway into the future. And I think that if people are really trying to make decisions about their Tesla investment, I don't know. I just think it's the right approach.
No, I don't disagree, but that's where I don't think AI will ever be able to do that.
Right. That's my point. Yeah.
Right?
Yeah.
Yeah, it's
Yeah.
it's you could have the best AI in the world, right? The best.
Mhm.
Okay. Well, you tell me who's going to win out of these 4 companies and which one's going to be the winner. Well, if it can do that, then everyone else can also know the same information,
Right.
and at that point, it's too late.
Yeah.
It's that's where the human element makes it so real. Everyone thinks that if they just have this perfect formula for the market, and then that's all they need, and then they can just set it and forget it and have this passive income, and it's the biggest lie on the internet is passive income.
Right.
It is literally the biggest lie. There's no such thing. But anyways, I don't want to go into another tangent.
Yeah, and
yes,
just one more little addition, which will promote the book again. One of the things we talk about in the book a lot is kind of the barbell effect. So we have this, the human still needs to prompt, and knowing how to prompt is critical. So I am starting to use the Grok for making predictions. Okay, but if I ask Grok, what's Tesla stock going to do tomorrow? That's not a very good prompt. But if I say, based on this factor and that factor and this factor and that factor that I find important, do you think those things are important? And how do you think it might, that's not necessarily the greatest prompt in the world, but it's a better prompt than what do you think is going to happen tomorrow?
yeah.
And the other end of the barbell is reading the results and going, that's ridiculous. or I can take a piece of that result that I got back and it makes sense. Now, that's true for every single thing that you do with LLMs.
Yeah, I think with AI, everything AI that's LM based, it's really good at doing tasks. They're very good tools. It's why FSD is such a good AI use case,
Right.
because it doesn't have to have a point of view. It just has to do this task really good, and that task is driving. It just needs to know how to drive really, really well, but it doesn't have to have a point of view.
Mhm.
It's all it does. But a lot of people want to act as if AI is on the precipice of being able to have this sentience and this point of view to be able to do things. And I think we're so far from that. I really do. I don't think we're anywhere close to that. But I think if you look at what it is, if you look at it as a tool, as a very high productivity, allowing you to get more done than what you would have, unlocking certain things that you weren't able to do before, it is phenomenal. And so I almost think that we oversubscribe what it can do, what it can be in the next 6 months to a year. And it almost undermines the greatness of it, because what's really great as is being this phenomenal tool for us. But it's a tool. It's what it is.
It's leverage.
Yes, it's leverage. Exactly. It helps you leverage your time. It's exactly what it is. Well, that was great use of the term.
So far earnings are super strong, and I used Grok for that. I have Grok go in and say, hey, give me an analysis of the earnings, because somebody, Bank of America will come out with one, maybe next week, and somebody else comes out with one, but I can do it every day. I can say, Grok, look at 100% of the earnings, and in 3 minutes, Grok gives me a percentage increase, and even goes and looks to see what people are saying about the rest of the season. Anyway, but the earnings are doing amazing. Interest rates are falling. Inflation is going away. Tom Lee just mentioned those 3 this morning on CNBC. And then he said, okay, I'm not at 7,000. 7,000 is low for the S&P for the end of the year. I think that's a low number. He didn't give a new number, but he's basically joined me, because 5 weeks ago I said 7,100 for the end of the year. What are you thinking?
Let me see. Let me see. Let me see if I can come up with the actual point of view.
Okay.
This is what you get here, people. You get real life, non-BS. Let me look at it right now. Okay. So SPX sitting about 67 roughly. Ooh. Interesting. We're probably about to go on a run on the SPX. Yeah, 7,000 is coming. I could see that. I don't know what it'll be, but the market's going to move up.
Yep.
Yeah. Yeah, 7,000 definitely seems possible.
All right. I'm sticking with my 7,100.
Yeah.
All right.
Especially, I know we're going to talk about gold and all that with the
Right.
numbers in a little bit
Right.
here. But we'll talk about that in a little bit. Go on.
All right. This is the last thing before the numbers anyway. This is another theory I get to throw out to you for the first time. Usually Larry gets them because I don't know, I have more ideas on the weekends or something. We could be looking at 8,500 on the S&P next year. That could be the fourth year in a row for 20% plus earnings. I mean, 20% plus on the S&P. That never happens. And I don't know what's going to stop it because everything is just so go-go right now. Now you can always have a black swan event or some weirdness that comes in. But as far as the earnings increasing, as far as, business doing well next year, I don't know what's going to slow it down. So if we get 4 years in a row of 20% more or more, 20% or more per year, do you think that there ends up being some kind of a wealth effect for the population that's investing that would be in itself a little bit of an economic phenomena, a phenomena that we need to pay attention to?
Well,
You're looking
I
at
mean,
100% increase. If you were just in the S&P, you doubled your money in 4 years.
yeah, but you know what the truth is, most people aren't. So the answer to your question is yes, but it's not anything different that we've seen before,
Okay.
right? I'm actually in the middle of Andrew Ross Sorkin's book 1929.
Okay.
You guys have to read it. He's not paying me to say this. Phenomenal book. You'll start reading it, you won't be able to put it down. Fantastic. But back then, we saw an even more exuberant market, right?
Right.
Pretty much anything you bought was going up 50, 60, 70% just
Right.
by buying it. It might
Right.
make money was easy. And well, we kind of see what the
Of
results of that were. Now there's so much more that went on to that.
course.
But the dot-com bubble, same thing. 07, 08, 09, you couldn't miss on buying a house, right? We've seen these things happen. Now, I'm not necessarily trying to describe a crash per se,
Mhm.
but what I'm saying is a lot of people got really wealthy, but there's a lot of people who weren't in the markets, who weren't invested. And so
Right.
things do get lopsided. But I think that's fairly normal.
Mhm.
And it's not as big of a deal as many people think. The truth is, wealth doesn't stay in families for too long.
Mhm.
I think on average, it takes about 2, maybe at most 3 generations before families give up all the wealth that they had.
Mhm.
Go look at your history books on this. It's actually quite fascinating. If you look at like the Carnegies, the Rockefellers, like you look at all these families, you'll be blown away by how many of them within 3 generations went broke.
Right.
It's great. Standard Oil. I mean, like it's wild. But that tends to be the truth, right? So that's kind of the interesting about capitalism is that it all kind of end up being given back. But there is a barbell effect where you start to get a more distributed, more people on the top end and more people on the bottom end
Mhm.
who are left behind,
Right.
and that's just the truth of it. But I don't think it's necessarily a bad thing. I mean, it sucks to be on the bottom end. I get that, but this is the type of economic system that gives opportunity to everybody.
Mhm.
So, like, and I get it. Like, some people are saying, I'm living paycheck to paycheck. I can't do anything about it. The truth is, you can.
Yes,
You
of
can.
course you
Like, it
can.
is possible. You just may not like what you have to do.
Right.
You might have to move. You might have to work extra. You might not be able to buy the things you want to buy. It's funny. Like, again, I don't want to give too much away, but I was talking with Tony again on this interview, and when Tony was 18, he didn't go to college or anything. He's 18. He left Brooklyn. His mom gave him her car, took the bus to work. He moved to Chicago to go at 18, and you couldn't be a trader until you were 21 legally. He couldn't be a market maker until 21, and he had a $5,000 to buy his seat, and all he could do is run tickets essentially. And so for 3 years, that's all he did. Save money. His mom sacrificed, gave him the car. He talks about eating spam out of a can. Just talks about all these things. Like, he had a rough 3 years, but he did what he had to do. He took big risks.
Mhm.
And I was talking to him that it feels like people don't take risk anymore. People are too comfortable. And there's something there that if you want that opportunity, if you want that long shot upside, you got to take risks. And the truth is, a lot of times that risk isn't really as risky as you think it is. It's just hard and uncomfortable. And I'm not saying take the stupid YOLO risk, go put everything on black at a casino. That's not what I'm talking about. I'm talking about getting out of your comfort zone. That was out of his comfort zone. Literally, a guy who grew up in Brooklyn at 18 says goodbye to everything
Mhm.
and leaves. His mom took a risk, giving her car, deciding to take the bus every day to work. Like, that's wild. That is wild. So I don't know, Tony. I don't know, Randy. I do think that there is going to be a wealth effect. There is going to be a haves and haves nots, but we've always kind of had that. Eventually, things kind of come back to the middle, but there will be some problems to come out of this. There's no denying that, and you can see it in New York right now. You see it in Portland. There's a lot of people that feel like the system is the problem, and to a certain degree, they're not wrong. That they live in a system that doesn't work with their worldview and how they think things
Mhm.
should
Mhm.
work. And in that sense, they're right. The
Mhm.
system is the problem because it doesn't align with their worldview.
Right.
But the truth is, they live in a country that is a system that will never work with their worldview. And so we've got competing ideas. And so if you want this egalitarian, high tax, no billionaires, no capitalism, you got to go move to a country that aligns with your worldview.
Right.
I'm not
Right.
saying leave America, but that is not what this country is.
Mhm.
You were born into a country, into a system that doesn't align with your worldview.
Mhm.
And unfortunately, that's coming to a clash. So they're wrong, but they're also not wrong.
Yeah, 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 yeah. And your homework will be to think about this because I put a big video out on Saturday morning to think about it in terms of the demographics, in terms of this. You talk about the wealth effect. So we've got the transfer of wealth down to the next generation, but we've also got the fact that all of this money, or the vast majority of it, is in the hands of the boomers. And that's something we've never seen before because people didn't used to live that long. So we've got these massive amounts of money, both housing wealth, pension wealth, et cetera, in the hands of the boomers. And I see that as having all kinds of impacts, not necessarily just social impacts like you're talking about, but impacts in the way that the economy moves, because seniors spend money differently than 30-year-olds. And seniors invest differently than 30-year-olds. And seniors make different decisions with regard to their housing than a 30-year-old does. So I think we have to be aware of the economic impact of how this doubling of wealth for a bunch of 55 plus folks is maybe going to impact things.
It's honestly going to be good for the economy
Yeah,
because you
it
get
should be.
you
Yeah,
get the turnover of the dollar, and
right.
that's really what you want. You want you want low M2, but you also want high money velocity. You do
Right.
want that.
Right.
So the turnover of a dollar is going to be good for GDP, for economic growth. And the truth is, those who have money are going to be the ones that spend it. And so you want that. Like you got to keep the system moving. It's funny. I live in a city that is booming. Like it's just it's
Mhm.
crazy how much growth is happening here. And you'll see there's this website called St. Pete Rising. A friend of mine runs it, and every new development that goes on, there's a new Waldorf Astoria that's getting built here, beautiful building, and you'll see in the comments people just saying they're ruining the city, another building for not the locals, and I don't know who's going to rent and buy these places and all this stuff. And it kind of baffles me. It's like, I don't think you understand how cities work.
Mhm.
Cities are also living, breathing organisms. They either continue to grow and bring in new people and new investors, or they die.
Mhm.
That's the only option. There's no the way it used to be. That
Mhm.
doesn't exist. And so again, this is reality of the system they live in confronting their worldview.
Right. Right. Right.
And there's so many people are just stuck with a certain point of view. I don't know where they got this. I don't know where they either got stuck in a certain time period, or they don't have the things, or they didn't make certain decisions, or they were taught something. I don't know. There's many ways where people get influenced, or maybe they're just born a certain way. I don't know. But it's crazy to see so many people upset and angry. And if they really feel this way, they could just move to a place where they think isn't like that. Like,
Yeah.
I just can't imagine waking up every day and just being so angry, not at a decision I made, not at my employer, not anything like I could get that. You could wake up every day upset you have this certain job, but guess what? You need to put food on the table. I get that. I do. I really get that. But to wake up so mad every single day about the country you live in, like that's insane. Like, okay, at that point, you're never going to be happy.
Right.
Because
Right.
at least one day you have the optimism, like I could switch jobs,
Right.
but you're not going to change the country.
Probably.
So
Yes.
you better get up and move. Like the country, you're not going to change this from being a capitalist
Right.
society.
Right.
You're not going to change this from being a representative republic. Like you're not going to get rid of the electoral college. Like there's certain things you're not going to get rid of. It's just
Mhm.
not going to happen.
Mhm.
You're not going to be able to untie the Christian roots of the Constitution. You just
Right.
won't be able to
Right.
do that.
Right.
Like again, this is just a clashing of worldviews, and so I don't know. I do feel for those people who I don't know. It's got to be rough.
It's got to be rough. Yeah, indeed. Well, okay, let's look at the numbers. So we've got Tesla down another 88 cents in the after hours or the overnights or whatever you want to call them, after being down $4.92 for the day. So we're sitting at 440, call it two. I thought that the action today was meh, not really. I mean, we had almost all of the loss was in the last hour, last half hour, even the last 15
Mhm.
minutes. What did you think?
Um, yeah, this is a lot of earnings coming up, and I think this is pretty par for the course. Everything's kind of just hanging out. A lot of people are probably taking some profits off the table before going to earnings. Uh, so yeah, yesterday was a big day.
Yeah, yeah. Bonds. Well, come on now.
You were right.
Thank you. Thank you very much. So we're sitting with the 10-year at 3.965, up I'm sorry, zero point 0.2 basis points in the pre-market. So yeah, I think we're under four. I don't think it's going to go back over four without some kind of weird thing. And now I'm shooting for 375. And so far, though, I mentioned this morning. So far, the mortgages have not moved like I thought they would. I thought they would be under six by this point, but they're still at like 6.22, something like that. Now FHA is under, but the conventionals are still at 6.22. So that's what we know there. We've got oil, unch. at 57.82. You and I talk about that every week, but nothing has changed. I assume your sense is this. Okay, so somebody said the other day they think that the president will start filling up their strategic oil reserve in order to get the price up.
He is. They talked about today. There's
Oh,
an
they did
announcement.
today.
Yeah.
Oh, okay. Totally makes sense. Buy low,
Yeah. Sell high.
sell high. Yeah. Sounds like a good business deal to me.
The opposite of what Biden was doing.
That's right. Exactly. Okay. We got natural gas up another 1.30. We are now at 352. That's high. It's very,
That's
very
high.
high. I know. You're just sitting there. You just want to talk about gold. So you remember my call on gold, right? You remember my call on gold?
4,400 maybe.
I said it would not. I said it would be 3,400 before it would be
3,400.
4,400. Yeah. And so twice it's bounced off 4,400. Now we're down 44,117.
All right. Well, let's see though, Randy. Why did gold go down?
Well, there's an awful lot of people out there that have their views of why gold went down. My view is it went up too far, too fast. I don't know why I picked 440. It's all what you're talking about. It was gut, but I just didn't think it could do. I thought it was going to bounce off of 440, or $4,400. And I think it's now going to drop off because it's gone up, what, 50% or something this year? I forget the number, but it's so crazy for 1 year for a commodity to move that way, even if it's a commodity like gold. Now that I've told you my gut reaction, what are the people saying?
So I'll tell you why
Okay,
I
you
believe
tell-
strongly. I know why gold went down. Okay. So this is something most people won't know. You're not going to hear this anywhere else.
All right,
None of your
this
viewers.
channel. Yeah.
This channel. That's why you should go subscribe to Randy. Go subscribe to me. Follow us on X. You are not going to hear this anywhere else. I guarantee you. I'm about to tell you. This is the first time you're hearing this. All right. So on October 13th, the CME put in a raise of margin requirement for gold futures.
Wow.
That went into effect on October 17th.
Wow.
It raised the margin requirement by about 5.5 to 5.8%, roughly around there. So, and for silver, it was like 8 to 9%. So both of them had margin requirement increase, and that went into effect on October 17th. At the same time, today, October 21st, China had the same thing, but their margin increase went 10 to 15%.
Whoa.
And that went into effect today.
Wow.
So the margin requirements for gold and silver has gone up a good amount. So you can imagine a lot of people, if they are over leveraged, if they just got margin called with a lot of these. So that is why I think gold took a tanking today, because people had to sell. They were forced to sell because they didn't have, they got a house call on them.
Right, right. And I'm going to add one more to it. And this is, again, one that I'm sure you're absolutely probably use in your analysis of things. And of course, it's the cab driver effect. Okay. So there were pictures.
Except I don't take cabs. My car is my cab.
There were pictures of people lined up, individuals, consumers, just regular folks, grandmas and grandpas, lined up in front of places to go buy gold. That was the other reason I knew we were at the top, is when grandma and grandpa are standing in line, in a long line, in order to buy gold, then it's over. So that was, there's a few different reasons for you.
But you tell me, have you heard anyone else talk about that?
No.
Have you seen that anywhere? No one.
No, 100%.
No one knows about this.
I didn't even see a headline on it. Yeah.
This is why you need to follow people who follow options.
That's right. That's right. All right. So we've got the dollar mixed. One of the headlines today was that the dollar was getting a little stronger, and that was part of the reason gold was going down. But I'm not seeing that yet. Personally, I don't know about you. Are you seeing any strength in the dollar that is outsized compared to normal?
No, but to be fair, I'm also not really looking at it that much. So
sometimes when gold goes down, you would expect Bitcoin to go up, but instead Bitcoin has gone down 2,413 to 108,419. So how are you feeling about Bitcoin these days?
Yeah, so Bitcoin, All right, this is where people probably unsubscribe to me. Bitcoin's not what people think it is. Or maybe it is. It doesn't act like what people say it is. It's supposed to be this hedge against fiat. It's supposed to be this reserve asset. It's supposed to be digital gold, right? We say this all the time.
Mhm.
Yet during the recent credit crisis with the regional banks, we saw Bitcoin lead the sell off.
Right.
Gold unaffected. Gold went up actually.
Mhm.
So I don't deny that Bitcoin is the best performing asset in the last 5, 6 years, whatever you want to say. Kudos, like no doubt about that. But the thesis is wrong, in my opinion.
Mhm.
It is not the reserve. It's not the hedge against fiat people think it is. It's not digital gold either. I don't know what to say it is. I'm not claiming like I know that,
Mhm.
but what I do know is if it is digital gold, it shouldn't be leading the sell off while gold continues to go up. That does not compute for me. Now,
Yeah.
maybe I'm wrong. Maybe there's
Yeah.
something I'm
Yeah.
not missing. I'm humble enough to say, like, you can tell me something that I don't know. I'm like, oh, that might make sense. But based on what I know, based on what I've seen, that just tells me it's not what people say it is. Again, kudos where it's due. Returns have been ridiculous. There's
Right.
no denying that. But it's not why. It's not because of what you said it was.
Right. All right. Finally, the equities. We've got all three of them down. The Dow down 0.04, S&P down 0.06, and the NASDAQ down 0.21. So pretty flat as it was today, pretty flat. I don't know how we get into any real motion in the indices when we have no government reporting of numbers. Now the earnings could be pushing it up. The earnings, because the earnings came in again so solid today. Coca-Cola, General Motors, I mean, just one after another, they all had solid earnings. We've been starting to get some IPO activity, so that's good. But in general, we will get a CPI printout on Friday, which I'm
That's
very nervous that it's going to be completely wrong because Truflation now clearly has us at 2.2. But we'll see what the CPI has. But go ahead.
that's what I was gonna say. I was
Oh,
just looking it up to confirm that I wasn't crazy. But you're saying that there's no numbers coming out, but CPI is still going to come out, so that's going to be meaningful.
right. It will be meaningful, even if it's wrong.
And well,
Yeah.
okay, so not to put a tinfoil hat on or anything. I don't think CPI is going to be an issue. There's a reason why the Trump admin wants to release it.
No, well, no, actually,
This is a choice.
what they did was they called them back. They had already sent them home, and they called
There's a
those guys
reason.
back. Okay,
There's a reason for that.
you think that
It,
you think that the
Kevin
numbers,
Hassett,
right?
Kevin Hassett was interviewed today,
Oh,
and they essentially point blank asked him like, "Do you guys know something? You must know something. Otherwise, why would you do this?" And
yeah.
I mean, you just look at his face, and it's like I don't know. Maybe I'm completely wrong. Maybe that's just how his face always looks, but it sure seems like
Well,
you know
of course, if you've got energy down a bunch, you've been talking about housing for at least 3 months now. Housing is definitely down, and then Walmart says today that the cost of the
$14 down
$14
$14.
down, not even equal or only up 1%, down $14 for a family of 10. And you can feed a family of 10 for $4 each.
For
Um,
Thanksgiving dinner,
for
everybody. For
Thanksgiving dinner.
Thanksgiving
Yeah,
dinner.
yeah, 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 yeah. I mean, it sounds to me like maybe the numbers will be honest and still good.
I think the numbers are going to be good because this CPI will be the last data before the next Fed meeting for the
Right,
rate cut. Like
right.
that rate cut's going to happen.
Oh yeah,
December is going to happen.
yeah,
Like we are in a. Can I say something else? Something else
yeah.
that you're not going to hear
Absolutely,
anywhere else.
absolutely.
Um, this is something else, and if you stay to the end, this is why you stay to the end for
That's
these
right.
things.
That's right.
Not just the margin requirement on gold, but also what I'm about to say now. We keep getting the, and not to sound like everything I say is so important, but I'm
That's why
dropping a little thing. Yeah. Look. I learn these things. I figure these things out all day, and then, I don't post on YouTube every single day like I used to. So these are my outlets to give it out. So then I was like, well, I want to get out because I want people to know the things that I've made connections on.
Sure.
Anyways, we have seen a lot of people try to draw parallels between the .com bubble and this AI bubble that we may or may not be in. Or we're in it, but we don't know where we are on the timeline. And if you look at, there's so many similarities. You guys know similarities. You've heard the similarities. Like, I don't need to explain those. But let me draw attention to where things are different. The first one, kudos to the BG2 podcast, Brad Gerstner brought attention to this. In the late 90s, the 2000 .com bubble, everyone talks about tries to make the equivalency of Cisco and NVIDIA.
Right.
Where Cisco was putting all this networking out there, all this fiber out there, but it was called dark fiber, meaning it wasn't being used. It was essentially the infrastructure is being laid out for what no one knows. With NVIDIA, there are no dark GPUs. Every GPU anyone can get a hand on is being used. Now, that doesn't mean there's ROI attached to it, but they're all being used. It's not laying idle. That is for damn sure. So that's one differentiator. The other one is, keep in mind, during the .com bust, the Fed was moving into a rate hike cycle. We are moving into a rate cut cycle. This is very, very different. And the reason this even came to my attention was because, like I said, I'm reading Andrew Ross Sorkin's book, 1929. The Fed was once again going into a rate hike cycle. So there are a lot of similarities. There's no denying that. But these subtle idiosyncrasies are very meaningful. They're not things just to ignore. So history, while it doesn't repeat, it sure does rhyme.
Right.
But they're not exactly mirror images of themselves. So I just want to bring attention to that. There's slight differences here.
All right. Okay. Well, I think we're at a close here. Now, the reason you're going to want to stay till the end in future videos is because it helps the channel. No, because at the end of most of my videos now, there will be an advertisement for the book. So you're going to want to hang around and watch that ad over and over and over, because, that's what we want you to do. Or just buy the book and then never look at it again. So I don't mean the channel, I mean the end. Anyway, Nick, always amazing to have you on. The baby's doing good?
Baby's doing great.
Is mom happy? She happy to have a baby?
Yeah. To say the least.
To say the least. All right. Thank you again for coming on and sharing. And to all of you out there, it's been great talking to you.
Cheers.